A pendulum is a weight suspended from a fixed point. It swings back and forth, manipulated by gravity. The markets work in much the same way. Price rises and falls, only to return to where it began. That's where Mario Singh's pendulum trading strategy comes in. It helps us trade ranging markets. Opportunity is truly everywhere. The pendulum is a powerful tool for making money when trend and reversal strategies fall short. Markets trend only 30% of the time. The other 70%, price acts like a pendulum. It moves only to return to a median value. Every time that price pulls away from the midpoint of a range towards support or resistance, market forces pull it back down towards the middle. Now with Mario Singh's pendulum strategy, we wait until price reaches its optimal rise or fall. Then we buy or sell. The trade execution rules are simple. We enter the market on a 10% bounce from support or a pullback from resistance. As price returns to normal, to that median value, we take profits at 50% and 90% of our established range. Now this strategy was designed for application to the Forex majors on the 1 hour and 4 hour time frames. However, you may apply the pendulum to any market on any time frame you'd like. Just do some back testing first. All right, let's begin learning how to trade this powerful strategy. Trading the pendulum is easy. First, we identify our support and resistance levels. Support is a swing low and resistance is a swing high. Our range is the distance between support and resistance. To execute a buy, we go long 10% above a bounce from support. As you can see, we buy in after a failed bearish breakout. To execute a short, we do the opposite. We sell the market 10% in front of our resistance level. As you can see, we sell after a failed bullish breakout. Once we align our pendulum entry, the stop loss and profit targets must be set. First, the stop loss. For a buy, the stop loss is placed at a 1-to-1 ratio beneath support. For a sell, the stop loss is placed at a 1-to-1 ratio above resistance. Okay, let's place the take profits. For a buy, the take profits are at 50% and 90% of our range above support. For a sell, the take profits are at 50% and 90% below resistance. All right, let's check out a real-world example of a pendulum buy. First thing that we do is we take a look at our resistance and support levels. You'll notice resistance is going to be this spike high right up at 108.72, and our support level is going to be this spike low down here at 108.36. Now, initially, we want to figure out our range. Our range is going to be the difference between our resistance level and our support level. In this case, it's 36 pips. Now, what we're waiting for on a pendulum buy is a test of that downside support and a 10% retrace in order for us to get long. Essentially, it's a failed bearish breakout. Well, you can see right here, we get our test. Our entry level is going to be 10% above our swing low, which is going to be about 108.40. In this case, we're going to round up 3.6 pips. 10% would be 3.6 of 36. We're going to go ahead and round that up to 4. Now, our stop loss is going to be a 1-to-1 ratio between our initial take profit, our 50% level, and our entry point. In this case, that's going to be 14 pips. So we're going to take 14 minus our 108.40, and we're going to be down here at 108.26. And our second profit target is going to be up here at 108.68. So that again is going to be 4 pips beneath the resistance zone. So let's go ahead and roll this trade and see how it turns out. As you can see, we've got a pretty darn good entry, and initially on this nice 1 hour chart, we're only in the trade a few hours and we go up and we get our points. Let's see if in fact we get our second points, and there it is. There's a big break. This was a news day, an FOMC day, and you can see that we got filled up at that second take profit. So this was a successful pendulum buy trade, a nice rejection of downside support, and we got filled up at our first take profit and our second take profit, and this was a significantly positive trade. There's two sides to every pendulum trade. All right, it's time to look at a pendulum sell. Now, the first thing we do is we identify our support and resistance levels. Real nice swing low right here for downside support at 108.34. And you've also got a topside resistance zone and upper extreme at 108.65. So our range is about 31 pips. And what we're going to do there is we're going to go ahead and multiply that by 10%. That's going to give us our entry point. That's going to be 3 pips beneath a hard test of this 108.65. So there's our entry. Our first take profit is 50% of the range. We're going to go ahead and round that to about 15 pips to have us some nice
easy numbers to work with. So there's 50% at 108.50. The take profit down here at 90% is going to be 108.37. Our stop loss is a nice 1-to-1 ratio. Entry point is going to be 108.62. Our take profit is right here, 50%. Our first take profit, that's going to be a difference of 12 pips. We're going to go ahead and add that 12 pips to our entry point, and that's going to be up there at about 108.74. So that's our nice 1-to-1 risk versus reward ratio. All right, let's go ahead and let this run and see exactly when we get involved. Okay, we are officially short this market. You'll notice that we have our right there's our swing high. There's a test of that area, and then there's your 10% retracement. So you're officially short. Now the real question is do we in fact get any money out of this, or are we going to get stopped out? Now you can see, oh, great, fantastic stop loss location. You'll notice the big reversal right there, and we get filled up with a nice pullback to our 50% and our 90%. So as you can see, that was a nice positive winning trade, and we got out of it right before we got the big move. We ended up getting a nice fill at both our 50% and 90% levels. So that was a successful sell trade for the pendulum.
Here are a few things to remember about Mario Singh's pendulum strategy. Number one, as long as the market trades within an established range, the pendulum may be successfully applied. Number two, get out at your stop loss when the market breaks. Your first loss is always going to be your best loss. Now, trading the pendulum is simple. Identify your support and resistance levels, locate your entries, and then set your stop losses and profit targets accordingly. Markets trend only 30% of the time. With the pendulum, you can trade the other 70. Now, are you ready to trade the pendulum? Good, that's what I want to hear. On our resources page below, we prepared a list of must-have PDFs. The exact rules, concept, and diagrams of Mario Singh's pendulum strategy are included. Check them out and get to work.